Welcome back to Montana this morning. Chad Lippert from D.A. Davidson joins us on the set this morning to talk about this week's market news. Let's start off with yesterday. Looks like stocks were down. What was it that influenced the market?
And that's right. Yesterday was a pretty big down day yesterday, Victoria. We were down 660 points on the Dow Jones, closed at 22,686. We had the big news was Apple coming out and lowering their guidance, revenue guidance going forward with the slowdown in China. So that's what really affected the market yesterday. Concern over maybe more of a global slowdown is what dropped it yesterday.
And what is it that investors can expect today?
Well, this morning a lot more upbeat news. There's talks that China and the United States will be getting together to talk more on negotiations here on January 7th and 8th. And so with that, the futures are actually up, and we expect a market open somewhere between 250 to 300 points higher this morning. So that's good news. All
right. And last, with all the market volatility, can you provide us with some historical perspective on, you know, what's happening here?
Yeah, yeah, absolutely. And there is a lot of good historical perspective. First of all, I've done a lot of reading. Of course, D.A. Davidson and Jeremy Siegel, who's a professor of finance at the Wharton College School of Business. Both of them have forecasts expecting the market to do well next year. Jeremy Siegel yesterday on CNBC said he expects that to go up anywhere from 5 to 15% next year. But a little bit of historical perspective, as you asked, if we go back the last 92 years, you know, a down market, one down year like we had last year is fairly common. About 1/3 of the time, historically, that's happened. However, there's only been 4 times going back 92 years that the market has actually had 2 down years in a row. That goes back to 1929 through 1932, of course, right before World War II, so 1939 through 1941, I believe, and then more recently in 73, 74, and then 2000 through 2003. So we've had 4 times that that's happened. So certainly the odds are stacked against it. We'll have 2 down years in a row. It certainly can happen, but historically that is pretty rare. So I guess the main thing for investors, just stay with your plan, review your allocation between stocks, bonds, and cash, but typically you're rewarded if you're a long-term investor, and it's a marathon, not a sprint.
All right, well, thank you so much for joining us here this morning. We'll be back after this break.